Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to share with you my prediction for the next bull market top based purely on what the chart is saying. I've not seen anyone use this chart before, so I'm sure you'll find this very, very interesting. Also, please make sure you stay with us to the end because I'm going to show you the 12-month time frame chart, which no one ever shows. And what it does, it gives you a bird's eye view over the next few years based on the last 12 years of what we can plan ahead with, so that it helps us not to make the short-term bad decisions which otherwise would ensue. So if that sounds interesting, then without further ado, you've got to stop whatever you're doing. You've got to get yourself a cup of tea. You've got to sit yourself down. With eyes on the screen, let's get cracking. But before we do that, let's open up the Bitcoin vault and let's get in the mood for Bitcoin. But before I begin, the usual polite reminder, please remember everything in my videos is always for educational purposes and nothing should be taken as financial advice. Please do your wider research before you make any investment decisions. Okay, so we're going to start off on the BLX chart on the monthly time frame. And what I've done is I've looked at the Bitcoin history since 2010 and drawn a few trend lines which have actually been able to predict the tops of the bull markets. So what you've got here is that after our very first top in Bitcoin in June 2011, this was followed by a mini bear market which had a support system which led to the actual first cycle top here at around 1170. And this was followed by our regular 12-month bear market that we've been following for the last 12 years. So similarly to the mini bear market here, we had a proper bear market for 12 months here and created a similar support over here, which again was followed by this blow off top in 2017 over here. Was actually quite predictable, although we didn't know it at the time, by the support and resistance along the previous history of Bitcoin price. So what I've done is I've actually simply taken the support trend line from here back in 2011 along this build up to the first Bitcoin cycle top over here and continued it all the way through to over here. And what we found was after the bear market here and then the support over here, the end of the second cycle just happened to be at the top of this trend line from back in 2011 over here at 19,800. So the question is, if we did a similar thing for the next bull market top, would it work? Well, similar to the first cycle trend line, we actually did a second trend line here from the end of the bear market in 2014 and just continued the trend line over here. And lo and behold, when we had the end of the bear market over here, followed by our bull market run over here, it just happened to end exactly on the trend line from the second cycle onwards here to give us our third bull market top at 64,000. Of course, we went up to 69 as a second top, but the trend line did predict the top of the market here. And the question is it doing similar now? If we take the trend line from the end of the second cycle and continue this, where would it go in this current 4-year cycle? But before I do that, what's interesting, you will have noticed this, that at the end of the bear market, at the end of the first cycle, when we broke this trend line here, that really marked the bottom of that bear market. So that was basically this candle here, the bottom of which was around 163. And if we look close up, you can see that that was actually the bottom of the cycle and no other candle closed below this bottom line here. So would that play out in the second cycle? Well, if we followed the second cycle top in 2017 at 19,800, then at the end of that 12-month bear market, the trend line went through just like this capitulation candle here. We had this capitulation candle which went through the trend line there. And if we have a close look at that, although that wasn't the actual bottom, we weren't very much far off. We did have this candle here close below the wick of this candle which had broken through this trend line. However, for all intents and purposes, this was basically the last capitulation here before we started to make this move back to the upside. So currently, this is where we're at. Once again, we followed the third trend line now here, which seems to be following a similar pattern to the first and the second cycles. And that is, bottom of that bear market there, we've created this support line here, which has now gone through the bottom of this bear market here. We've had a capitulation candle at the end of this trend line over here. And just like over here, where there was a few months before we had a big move up here, a few months here before we had this big rise up here. And the question is, are we going to have a similar rise once we get through these next few months over here? So the million-dollar question is, what is this line predicting at the end of this bull market that we're going to be entering very shortly? And here we have it. This pink vertical line is at the 1st of January 2026, so it's at the end of 2025. And if we're going to have a 4-year cycle, the first cycle is the 1-year bear market, followed by 3 years of a consolidation and a rise for the remaining 2 years up to a blow off top. If that is what we're going to be having, then that would take us to the end of 2025. And if we continued this line here, this support trend line all the way through, just like in the first and the second cycle, then we would get to this point here, which is at around about the 340 to 350,000. So just based purely on the facts of the charts, the lines that were predicting the top of the 2017 bull market and the 2021 bull market is currently predicting a 340 to 350. Now, I've watched many YouTube channels and some are even predicting 90,000 and 150,000 and 200,000. And of course, anybody can be correct. It all depends on how you look at it. But if you look at the bigger picture, this is what it's showing. And certainly we can take this into account, which may help us not make the short-term decisions over here when we know that there is a potential for the market to grow so much over here. So how that helps is that if you're thinking of getting out of the market over here at these levels here, then what you're doing is you're going to be missing on this rise over the next 2 to 3 years. So as long as you've got a 2 to 3 year view from the current levels of 20,000, if the market does go to anywhere beyond the 300,000, then you'll be very well rewarded with around about a 15x over the next few years. Okay, so I hope you found value in that. While there's very little action going on in Bitcoin, it's always very useful to find out when you zoom out and look at the bigger picture and you find some incredible gems of where this market may be heading, and you look at the patterns which, if you followed them through, if they've happened in the past, then there is a very good likelihood and a probability that they may well repeat themselves again. And once again, time will tell whether that happens or not. This is currently where we're at here. In the BLX chart, it's around about 19,100 here. And the thing is, we've broken through the white line to the downside here, just like over here and just like over here in 2014. And as you can see, we went sideways for a few months before we started moving up. So the point I'm trying to make here is that we are virtually on the cusp of starting to move to the upside. And this is where most people get caught out, because the psychology over here is that people have got fed up with all this lack of activity, the lack of action, the lack of making money, the lack of a rising rally here. And because of that, everybody's just on the sidelines. And this is what's happened in the last 2 cycles. You get these small candles along the way, and then suddenly you get a big burst over here, like this candle, and this candle over here. That takes everybody surprised when everybody's expecting a downward spiral here. And these candles may look small. This is on the monthly chart. So in 1 month, this little candle here, if we look closely, was around 55%. So in 1 month, Bitcoin here, when everybody's expecting a downward move, Bitcoin moved 55% higher. And in the second cycle here, this one move here, after small candles over here, can you see? It's making people think that it may go down one more time, but then we got this big candle over here. And if we measure that candle, it went from the bottom here to the top of that candle, 39% over here. And if that was to repeat over here currently from the 19,000, if we went up about 30% here, that would take us to about 25,000, which would make sense. So we could well go within a month from where we are to around 25,000. And people will still be thinking, oh no, it's coming back and we're going to go lower. Whereas actually, It may well have bottomed out. So please be aware of that. Okay, moving on to the 12-month chart. I want to show you something very interesting. Now, on some people's 12-month chart, this candle here is actually red. And on some people's charts, like mine, this is green. So when you look at your 12-month chart, you may well find that this is red. So the interesting thing here is that whether this is red or green, what we've got is from the beginning, we had one candle, green or red, followed by 3 green candles. Then we had the bear market over here, followed by 3 green candles. And then we had the bear market over here at the end of the second cycle, followed by 3 green candles. And currently we've got another red candle. So if this chart pattern was to continue, then we've got 3 green candles to follow up here. What's interesting with the red candles is that this first red candle after the end of the first bull market, the range was around about 71, 72, 73% fall before we started getting the green candles. The second one in 2018, the range was all the way down to 81%. So we had 71%, 81%, and the current one up to now is around about 63%. So this is the shortest red candle that we've got. Remember, this is a 12-month candle, which is from January to January, so it doesn't take into account the fall from November last year and December. So 71, 81, 63%. And some would say, well, the average of the 70 and the 80 would be about 75. So this may well have one more leg down. And of course, they could be true. We'll just have to wait and see. So what this tells me is that as long as you've got a 12-month view, the chances are that if you were buying or holding at these levels here, the chances are, and in 2023, if we followed this chart pattern here, we're more than likely to get a green candle. And if we started that green candle here at around about 18, 19, 20,000, if we get a green candle, it's going to be up here. So there is money to be made over here. Even if you're making losses at these levels, there is a chance to recover. So you've got to have at least a 12-month view, if not a 3-year view from where we are now. So what that does is really helps us to actually not make short-term bad decisions here, knowing that what could follow based on what's happened in the past here. And always remember, these patterns do continue, and that's just the way the charts are. There are certain fractal patterns that actually develop and continue over a longer period of time. Not to the exact amount, but very similar. Okay, so I hope you found that interesting. And if you did, then please do remember to like and subscribe and to turn on the notification bell. Okay, finally, I want to just show you something, what's happening on the daily chart, just to bring us up to date with what's happening. And that is that we've got this downward dominant trend from the 69,000 all the way down to currently, we're in this channel here. And we're coming to the apex of that. On the daily chart, we've got a very strong support line at around about the 18,000 here. But within that now, we're developing a secondary support line, this red line over here. And I'm just going to have a quick look at that now. As you can see, this secondary support line over here seems to be holding very, very well. We made several attempts to try and break it here, over here, over here. And currently, in the last 2 days, we've made attempts to come down, but the market has bought up at these lower levels. So currently, we've got this hammer candle. Obviously, this is a daily candle. It hasn't closed yet. But once again, these long wicks are telling you that there is a lot of demand being bought up here in these lower levels. And the million-dollar question is, will we break up or will we break down from here? The Bollinger Bands are squeezing together, as you can see here. And whenever we get an extended squeezing of these Bollinger Bands, it is usually followed by a very big move to the up or the downside. And that's exactly what we're waiting for. And currently, everybody's getting bored with this sideways action, which we've had since the capitulation over here. So if you look at this sideways action, we haven't really moved very far. We've gone from about 25.5, which is the height, in the middle of August, and we've gone down to around about 18,100 down here. So this is the range, which is getting lower and lower and lower to the point where it's about to break out. So really, it is the moment of decision now in the next few days, maybe next few weeks, which will decide either one last leg of this bear market or the beginning of the next bull market. If we did break to the upside, then this is the first level that we would be seeing a resistance at around about 22.5. And if we can navigate our way up above that, then the next level would be the 25. This is what I'm expecting to happen if we did break to the upside. And if it did break to the lower side, then this is the level, obviously, that we're all looking out for at around about the 17.5. Any fall below that, with at least a daily close, would mean a waterfall to the lower sides, maybe 12, 13 or 14,000. But do look out for a fall down here and then a recapture of this. This is very bullish if this happens. So if we lose the 17.5, but within the daily candle, we recapture it above this level here at 17.5, then this is what can be expected with a high degree of probability. And that could well be the final piece of the bear market puzzle that we've got currently. Okay, so we'll leave it there. I hope you found value in that. And if you did, then please do remember to like and subscribe and to turn on the notification bell. If you have any comments, questions or suggestions, leave your comments below the video. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.